Welcome to Growth and Inspire, where we examine topics that make us feel inspired and grow. I'm your host, Bonnie Yam. Today, our topic is about tax minimization. Are you paying more in taxes than necessary? Tax minimization is about strategic planning to reduce your tax burden while staying fully compliant with the law. By optimizing deductions, credits, and financial structures, you can maximize your savings and keep more of your earnings. You've probably heard about retirement savings and charitable donation. Today, we're going to explore a very interesting program that can really multiply how much you can deduct. It is called the Leveraged Ownership Series Strategy. And with us today is Loren Hollingsworth, President of Sophic Wealth. Hello, Loren.
Hi, Bonnie.
So happy to see you on our podcast. Now, before
It's a
we start,
privilege to be here.
can you tell me a little bit about yourself and your company?
Sure, Bonnie. So I specialize in advanced tax mitigation strategies. And so I serve primarily as a consultant for CPAs, tax attorneys, financial advisors across the country. And my firm has over 40 to 50 different tax mitigation strategies that we will deploy to benefit clients in legally minimizing what they have to pay in taxes. I am a patriot, had the privilege of attending West Point, the United States Military Academy. I believe as citizens, we should pay every penny we are obligated to pay and not a penny more. So I'm rather passionate about what I do, and most simply am probably just a geek. Bonnie,
No.
that's all. I'm just a geek. So it's a privilege to be on your podcast. Thank you.
So tell us a little bit about the leverage ownership series strategy then.
Okay. So from the broadest perspective, this leveraged ownership series strategy is simply a restricted access opportunity that uses a specially designed limited liability company to leverage capital contributions into a negative K1 up to 10 times the initial capital contribution. I realize that's a lot to take in, so please allow me to just give a simple hypothetical example. Let's pretend a client had $1.3 million of net income from their business operation, so net profit of $1.3 million. Well, in that scenario, they would probably, depending upon their filing status and their state of residency, would end up paying somewhere around $600,000 to $700,000 in state and federal income tax on that $1.3 million of net profit. That would be status quo. Alternatively, they could make a capital contribution of $125,000 into this special leveraged ownership strategy. That $125,000 capital contribution would, in that little entity, generate a negative K1 for $1 million. Well, that K1 for a negative $1 million would combine with the 1.3 of net profit, leaving them only $300,000 of remaining taxable income. They might pay $40,000 to $50,000 on that remaining $300,000. So out of pocket, they would be the 125, plus there's a small admin fee. So they'd be out of pocket about $200,000 in tax, admin fee, and capital contribution, which puts about $500,000 back in their pocket immediately.
Amazing.
That's the
Amazing.
power of the
Yeah,
leveraged
that's
ownership
really amazing.
strategy.
Yeah. Yeah. What type of income can be offset with this program?
Oh, it's a great question. So, due to the unique design of the LLC operations and the effect of special allocations under the tax code, this negative K1 can be used to offset both ordinary income and long-term capital gain.
Wonderful.
What
Yes,
it cannot offset is W-2 wages
I see.
or distributions from qualified assets, i.e. 401ks
Oh,
or
I see.
IRAs. So
Yes,
someone that's trying to do a Roth conversion, we would not use
we'll
the
use that,
structured
right?
or the
Yeah.
leveraged ownership series for that.
Okay.
And
Got it.
someone that has significant W-2 income, we wouldn't.
Mhm.
But virtually any other source of income, we could mitigate with the leveraged ownership series strategy.
Good to know. Wonderful. So what about the minimum and maximum income this program is designed to offset?
Excellent. So generally speaking, the minimum capital contribution is going to be $100,000, which would then offset $800,000 of ordinary income.
Wow, 1 times 8, 8 times.
That's it,
That's
eight
great. Yeah.
times. So that would be the minimum level of participation. And candidly, I never advocate zeroing someone's taxable income. So they would probably need about $1 million of
I
taxable
see. Of
income
course. Yes.
to
Otherwise, you
merit
get audit or
800
something.
of offset. So
Yes,
they
I
still pay a
agree.
little tax on
Yes.
200,000.
Yes.
Um, so that's the minimum level of participation is about 100,000 of capital contribution. And we really do not have an upper end limit. I've literally
Ah,
worked with several billionaires this
wow.
last year,
Uh-huh.
and we can offset up to easily
Whatever, right?
up to $1 billion of
Wow.
taxable income using
Amazing.
this
Yeah.
leveraged ownership series strategy.
Yeah. Very interesting. So, important question. Has this program been reviewed by IRS? Have you been
Ah, it's a
vetted?
great question. Great question. So the answer is yes, it has. In fact, it was designed by two of the smartest tax attorneys alive. They first utilized the program, I think, back in 1999. So in
A
the
lot of
25 or so years that it's been around, there
Mhm,
have been hundreds of participants in the program. It
mhm.
has never triggered an audit.
It's- That's great.
Nonetheless, with that many participants
Mhm.
over that many years,
You
it
know,
is inevitable that some of them have undergone audit for other reasons.
that's right.
So, 4 times participants in the program underwent audit for other reasons, and the program itself was also reviewed under audit. 3 of them were federal IRS audits, one was actually the state of California.
Mm,
Every time it has undergone audit, it
that's
has
great.
been upheld under
That's
audit.
great. That's wonderful.
So it's
Yeah.
a very
Yeah.
appropriate use
Yeah.
of tax code.
Long history and then very reliable. Right. So that's good. Yeah, good to know.
Agreed. I'm going to add one more piece, and that's
hmm
this. I
hmm
mentioned that I had the privilege of going to West Point, the United States Military Academy.
hmm
Well, I have participated in the structure, the leveraged ownership series strategy myself. I have my own little entity. And that gave me the right to hire independent counsel to review the program on my behalf. So I did that, and I hired a tax attorney who is also a West Point grad. I
hmm
did that on purpose because I know that his primary concern is watching out for my backside. That's what we do in the long gray line. So he
Good.
evaluated the program as well independently.
hmm
And he called me back and said, Loren, not only is it appropriate use of tax code, this may be one of the most effective tax mitigation strategies I've seen in my entire career. And he put it in writing and prepared for
Wow.
me a legal
Well,
opinion letter
well, all
validating.
documented too. Wow, wonderful.
That's it.
Yeah.
So
Well, that's a lot of great information, and I'm pretty sure it's pretty complex, and there will be people with more questions. So reach out to us, and we'll be very happy to set a meeting to get all your questions answered. But this is like a fantastic idea. And if you do have lots of taxes that you want to minimize, I think we have a great resource here. And with the right approach, tax efficiency becomes a powerful tool for building financial success. So thank you very much for joining us. Thank you, Lauren.
thank you. Have a great day.
Okay, bye-bye.